Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, to sign up for this, it's a $199 a month. You sign up for reoccurring payment, but you know what? I don't require you to stick around for more than 1 month. All you have to do is, stick around for the December series. Honestly, most of my students stick around for, 2, 3, 4, 5 months. A lot of them start out saying, hey, I'm just going to stick around and watch this December one. But then they want to stick around and see more. But like I said, it's only $199 for December. If you go to this URL right here, bit.ly/mtmdec, all caps, it's case sensitive. You go there and enroll, and we can get you in Thursday's class. Seating's a little bit limited, but I've got enough space to fit a few more students in. Now, I'm happy to field some questions here about either my online education series or about material I covered here in the presentation.
Dan, excellent job. Excellent job. Just want to, again, reiterate Dan's point. Please type in any questions that you might have regarding the presentation. Dan is gracious enough to stick around for another couple minutes, so please type them in.
Oh, we do have a question here. I guess I didn't see it. From Mike. How, if at all, does the VIX come into the picture with FX options? How do you take volatility into account at times like this when volatility, the VIX, is low for an extended period? Mike, great question. The VIX is kind of relevant. The VIX is, for those of you who don't know, it's the implied volatility of the SPX, or the options on the S&P 500. Now, if you're trading currency options, you care very specifically about the implied volatility of the options on that particular currency, because you're making or losing money based on changes on that implied volatility. So, in the same way that currencies play into the U.S. stock market, that's the same way that, the VIX would play into the implied volatility of currencies. So directly related, I don't know if I'd say directly related, but related for sure. Now, Jim asked about volatility skew. Jim, I'm going to give a brief synopsis of volatility skew, and then I'm going to point you in a direction here. Volatility skew is this. It's when options on the same underlying currency are different. Or, excuse me, traded at different volatility, rather, I guess is a better way of saying it. So, the volatility on one call could be 11, but then in a different month, the volatility on the same strike call, but a different month, could be 10. And the same thing with strikes. Now, I'd like to direct you, and Steve, you can correct me here if I'm leading people in the right place here, but I was looking around fxoptions.com a little bit ago, and if I'm not mistaken, Steve Meisinger wrote an article on volatility skew on FX options. Is that right?
That is correct, Dan. Yes. And I hope everyone reads it, Trading With or Against the Skew.
Yeah, so take a look at that. That's where you're really going to get some in-depth information that is a little deeper than I have time to cover here. All right. Well, thanks everyone, and Mike or Steve, thanks for having me.
Dan, thank you very much. Your presentation was excellent. And again, please, everyone, you should go and check out Market Taker Mentoring. And if you're interested in Dan's services, please, just go and check it out. He has his webinars, the monthly webinars. How much is it? $149 for a month, Dan?
$199.
$199. I'm sorry, $199 for a month, and you only have to pay for 1 month, and then it's recurring. But of course, you can cancel. Correct? After a month.
Absolutely, no problem.
So please check that out. And I want to thank Dan for the many presentations that he's done in 2010 as we are winding down our 2010 schedule. So, Dan, I hope you'll be back in 2011.
Sure will.
Dan, thanks again. Really appreciate it.
Likewise. Thanks you. It's nice talking to you.
Thank you. Just want to remind everyone that that was Dan Passarelli on navigating the sea of volatility with FX options. Next week, we have Jack Crooks with us. Jack will be talking about his U.S. dollar forecast, what's driving the global markets. If you've ever heard Jack Crooks speak before, you won't want to miss it, as Jack is really the expert on the fundamentals of the currency markets, at least for the guests that we have here at the ISC. So there's lots happening in the currency markets. We all watch this each and every day the last 2 or 3 weeks. There has been some tremendous opportunities with, of course, risks as any kind of trading vehicle. So please join us next week, December 7th, Jack Crooks' U.S. dollar forecast, what's driving the global markets. And again, I want to thank Dan Passarelli for a great presentation. Thanks again, Dan.
Thank you, Steve.
On behalf of the ISC, this is Steve Meisinger, your host, wishing you a safe and happy trading day tomorrow. And please join us again next week when Jack Crooks comes and joins us talking about his U.S. dollar forecast and what's driving the global markets. Take care now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.